Good morning, Quasar Markets Live. Happy hump day. It's Wednesday. I know I'm getting confused all day, still think it's Tuesday. I've got the legend himself of Wall Street, BigBeat, in the building. How are you doing today, Steve?
Sometimes, I'm going to use a baseball analogy this morning, but, sometimes you got to hit a home run. You got to talk about it, right? You got to run those bases. And look, we've been talking about NVIDIA for a while now on that dip or DeepSeek. Look at NVIDIA today. Woohoo! And then you look at yesterday, we talked about Solana on that FTX dip, and we picked it up yesterday. Somewhere around 163-ish, and look at today, it's at 170, hit 174 earlier today. I was very happy. I'm going to say long. I've actually staked it, Howard. So
you're getting
how about that?
I've only been asking you to do that for how many years?
Yeah, well, this was a special one, right? Because I've been looking to buy Solana, and I like the dip. As you know, I was buying Solana in the teens, and here we are, back to 171. But you know what? Staking, if you're looking for a long term, I now understand staking in a way that's a little different than most people. Most people think of staking, I just want my percentages. But it does give people that ability, more liquidity, right, in the market. And I don't want to give everybody too much liquidity, right? Because then that causes volatility. But I do like what we're doing here. So I like this for longer term. And so I like it at 171, I like it better at 174. But I think we go back to 180, 200.
Yeah, absolutely. I'm long Solana again. Same thing. I got in at 165 or so. We'll see what it does. As I said, for me, it's probably more. I have Solana already in my long-term portfolio. This one, I'm probably looking for a play back up to close to that 200 area, and then we'll look to exit. You mentioned Mag 7. We've been over it. And NVIDIA, we were looking at it back here in that 117, 120 range. Now back up at 140. You were beating the doors off everybody back in this range here, telling you to get in. Same thing, Tesla. We nailed that one, right? I said, look for that 330 dip. It bounced right off that 330 dip and has basically gone up straight to that 360 that I said to take profit at. We've been over a lot of these bigger names, smaller names. If you're watching Jeremy Vreeland through us and all of those guys that are the Quasar contributors also, they've been nailing it. Okla was a huge win for them recently. VST, Vistra, they've been over sections. So make sure you're paying attention, and getting some ideas here. And don't be afraid if you are on X or YouTube and you want us to take a look at a ticker, tell you what we're thinking out there from a technical analysis size. We will definitely do that for you also. Steve, gold, it just keeps on moving right now, right?
I think we talked about this quite heavily, right? That the question for me is now, when Elon goes into that vault at Fort Knox, what's he going to find in there, right? And to me, there's a good question. 1987 was the last time.
Yeah, and it seemed that when we, a couple of things were interesting to me that Peter Thomas chimed in as we had people asking some questions. That's supposed to be done every 5 years. Hasn't been done since we went off the gold standard. So that's a problem. He did also say it will take at least a year basically to get it all done because they've got to randomly melt down. I just thought they'd go in and start counting. No, he's like, first what they do is they test purity in a couple of dozen different locations to make sure everything's hunky-dory. Then they can start counting. So I did think that was interesting. I will say everybody, starting with you, has been calling for the same thing, this run up to 3,000, and then look for it to be in a little bit of an overbought, situation. So are you still feeling that way?
100%. Like I said earlier yesterday, that if we have a situation where there is some discrepancies, shall we say, in the accounting and how they accounted in the back, we have better ways of accounting than they did in 1987, the last time they went through the machine, went through Fort Knox. They also have ways of looking at things and
X-rays and all
drone it. They can do a lot of things in Fort Knox now that we never could back, in the 80s. And that might speed the process up a wee bit. But if there are some discrepancies, I think we got some problems. I think we're going to have The full faith and credit of the United States could be called into question. The AAA rating for the United States may be called into questioning. We've also got an issue with Congress, whether or not they raise the debt ceiling. I know Trump was asking for that to be raised so that we can get through this section here. There's a lot of problems here. And I'm not, this is why gold's pushing higher. It's not just because the institutions are buying. It's not just because countries are buying. It's because everybody's buying, right?
Right. From retail up, I think, is what you just hit on. That definitely is the takeaway that I have. I do know Peter jumped in yesterday to also warn us that the gold silver ratio had hit pretty much an all-time high above 90. So he's very bullish still on silver. You have been, again, I'm seeing more and more talks about it. So we'll see. I didn't realize that Mexico is the top silver producer.
Top silver producer in the world. It's correct. Yes.
Yeah.
And I'll say this much. I mean, when you look at, yes, the gold to silver ratio is the highest ever. 90 is high. Whew. That means gold has really left the building. But silver will catch up. And when it does, it'll be fast and nasty. And I think that it could happen very quickly. So right now we're at 32.82. I mean, we know it's going back to 33 because that's where the last bump was. And we're going to go right back to it. So, yeah.
Yeah, silver's looking real strong. It did come back below that 33 handle of 32.819 here, but definitely still looking very strong when it comes to silver without a doubt here. Nat gas blew up too, Steve. Now back above, was above 430 or back above right at 430 as we're speaking here. So Nat gas, my takeaway there is I didn't realize how little Europe is holding right now. Their storage is at 43%.
That's correct. You're absolutely right. You took the words out of my mouth. Actually, when Europe saw the slip in nat gas prices, they took advantage of that and bought a lot of the futures as well on that too as well. And it's pretty cold outside up north here in the United States. I wouldn't know. It's 80 degrees down here. But
Yeah, you don't have your sweater on today, I noticed.
That's right. But I will say that, hey, here we are. I'm a little concerned here. Nat gas is a little bit spiky and a little bit high to me. And I know Putin and has been talking about energy. Nat gas is the energy he's talking about, right? He produces a lot of nat gas. Ukraine produces a lot of nat gas, and that thing popped right back up. Now, they don't call it the widowmaker for anything. They call it the widowmaker because it can make you a widow very quickly. It can get that heart pumping. I'm telling you,
would you be selling here if it gets back up
I
at 450?
Right, correct. 450 is high for nat gas. Now, is 450 high if the spigot gets turned off in Russia? Is 450 high if we have a cold snap all the way until April and June, as Buffett would sing? Buffalo. Listen, there could possibly be, but no, I think it's pretty high right now.
Yeah, and we've seen the 3 times that it's made that move. In fact, you were out of the country for 2 of these, and I told people at 450 that you have always said that is where basically to short it. And we saw it go from 450. The first time you said that, when you said it on the air, we went from 450, and in a matter of 3 days, we're back at 350. When it hit again, and I brought it up, it went from 450 down to 380. And then when it went back up again, came all the way down to 340 again. So this has been a nice play if you've been listening to us. So again, at 450, keep an eye on it. I think the other part about it is you start to set up a very nice asymmetrical trade, because if you're here at this 450 and it breaks 460, you got to get out of that trade. That the vacuum is going to start, short covering is going to start, and everything's going to take off. So what I love is when we're at the edges there, it gives you that asymmetrical trade. So let's see if that keeps up here. Oil, another one, Steve, all over the news. We did see that crude stock is up about 3.8 million barrels, which is lower than last week. So while Trump has been not buying at quite the same demand that we saw over the last couple of weeks, I did have a couple of other notes here on oil that I wanted to ask you or talk to you about a little bit here. Here we go.
I mean, the $70 handle seems to be about where the bounce is, right? You're looking at Brent right now, which is North Sea. That's London crude.
Yeah.
which is a little more expensive because of how they dig it out of the ground, pump it. But $70 is about where the bottoms are. 68, 70, somewhere around there is where it holds down there, because that's what the drillers need, pretty much.
Right.
We are right in that no man's land that I don't like, where to buy or sell now. The big talk to me is Zelensky and Putin and Trump and this weird Bermuda Triangle talk, where United States has protected Ukraine, and now Marco Rubio going to see the premier in Russia, and Lavrov, and now saying it's all Ukraine's fault. Ukraine is backing out, and Ukraine's backing, screaming at Trump, saying he's living in a disinformation bubble, is I think what he said, and saying we're not going to be carved up, and it's getting to be a little bit wonky, and the Ukraine situation may get out of control. If that's the case, nat gas will explode to the upside. If that's the case, look for oil to also push up for a little bit, and then look for the spigots to be turned on in Russia, where the price just falls apart. Then you're going to watch for OPEC. And that's what I'm talking about. That's why oil is so fun. Then watch for OPEC to back out and say we're not going to release more oil. We'll continue to keep our cuts on and keep the price up. So this could get very, very, very wonky over the next say month or two. I don't like that kind of news cycle to news cycle, so I would stay out of oil for right now. Just let it do its thing. If it gets below 70, then it's a buy. Futures could be a nice little pop. If you look at possibly the summer futures, I could see that maybe July oil. And of course, if you're looking for a longer term, DEES natural gas and December's natural gas, the old trader in me, DEES nat gas will push higher too. So this is some way of protecting it, but right now it's not a place where I'd want to be right now, and I'm not in any energy right now.
Right. Yeah. And what I also did notice is, as you said, OPEC Plus has delayed their planned production increases till at least April right now. The other things that I took is in the U.S., it looks like our distillate stocks are what are down. Gasoline and jet fuel stocks are actually up. So I don't know if that matters one way sort of or the other with it.
Yeah, for those of you out there that don't understand what Howard was saying with distillate, that is what we, after oil is refined, what does it break up into? And jet fuel is very expensive. It's higher octane. And of course, if you look at it from the perspective of all of the things that oil can break up to into lipstick and things like that, the inflation rate is pushing higher. So there is a spread between the distillate and crack. So could get worse, meaning that if we don't upgrade some of our refineries quickly, then we could get a problem. What do I mean by that? In the United States, there are refineries all over the United States. A lot of them are in Louisiana, in Texas, where they refine the oil into other things like gasoline, like I think you just said jet fuel, and distillates. So I would look for the list of distillates and kind of figure out. You can also play the futures of that. Now that's a lot better, and I think those go higher.
Awesome. We do have a request by Ron to take a look at Cheesecake, one of your favorite companies.
Yeah.
As it pulls up here, unfortunately, TradingView is doing its fun stuff today where it's giving me a little bit of delay. Nothing too bad, though. There we go. I will see Cheesecake is a company that I am a fan of in general. We have seen them do well. The last couple of earnings, they're real close to all-time highs, though, so that does make it a little bit more concerning.
Nothing's going to stop it, baby. It's going to go higher because, quite frankly, I just did a post on Quasar Markets. If you're not doing that, make sure you're following us on Twitter, because we are doing quite well, getting close to 100,000, might add. On obesity, listen, these drugs are growing. Wegovy, Mounjaro, Zepbound is the word for that one. Ozempic, obviously. And you know what? People are going to fancier restaurants, but still want that speed, and they want the sit down. They want the experience, but they're not going to McDonald's anymore. They don't like the experience. They don't like, going to a board or a phone or an app. They want to talk to somebody, and Cheesecake does that. And Cheesecake makes great food, and it's busy. But to me, their biggest thing is their expansion. They are expanding and growing. They're not cutting back on their restaurants. They know that. So for me, I still like Cheesecake Factory, and I think that this is one that continues to push higher. And if you look at,
I am a fan. I will say they're looking to make a pretty big increase from where they were EPS wise. On their last earnings, they came in about 60 cents, looking for 90, but you had the holiday season for that. We've seen some earnings through holidays be pretty good here. I don't think they need to blow it away to continue to rise up, which is nice. This isn't trading.
I think they will blow it. I think they will beat earnings, and I think it'll be
a
big.
But what I was just getting to, it's not one of those like we see with Snowflake that trades at 95 EPS, price PE earnings.
I will say this much, Howard. I did speak to a friend of mine who owns several Krispy Kremes. Okay. And he said the same thing. Look, the costs of goods has really exploded. And he said that it's hard for a lot of people, consumers, to continue to quote, quote, eat that, right? And, as food costs go up, it's harder and harder. Those margins get smaller and smaller. So they have to find other ways to make money, right? And in Cheesecake situation, usually the biggest winner in food is not the food itself, right? In your main meal, it's appetizers and it's desserts and cake. So these are the two things.
They're a dessert place. Desserts have high profit margins, which help. I was just looking; they have a pretty good dividend too. Cheesecake about 1.74%, so not too bad. 27 cents a share. But I think around that they could have some good earnings today. I think that what we've seen out of Darden fares pretty well for them. So I think, if I'm not mistaken, Darden had good earnings last week, right?
Yeah.
Just pull that up just to double check it, because they would be similar companies when it comes to their customer base, I would say.
Yeah, I mean, Darden in of itself is
Maggiano's cheese. They have Maggiano's. They have Cap Grill on the upper end. They go a little bit further down with Chili's, but not Chili's. Darden's been up well. So Ron, I think it bodes pretty well to it. You can see same thing. Darden, same type of situation, trying to break to an all-time high. Also,
I don't think that the key to the big win here on cake is earnings. I think it's guidance. I think it's what the CEO says to us and says, hey, we're expanding and here's what we're doing to even grow it even more. That's when I think that this thing goes even higher, right? Because you can see the expansion physically, but I want to know what the CEO says when he says, hey, you know what we're looking at? We're looking at other countries. That's international expansion. Could you imagine? Oh my goodness gracious. Cheesecake Factory everywhere.
That'd be an interesting one. I wonder how that would do overseas.
I think
they don't usually like huge menus in most of the foreign countries. They are.
I'm fully aware of that one. That's for sure.
That would be interesting. But
I will say this much. When I was in Japan, is pointed a picture in your order, right? Cheesecake Factory is the same thing, right? Their menus. But look, I think Cheesecake Factory understands the international expansion side of it. I think that they'll change their menus to that. Maybe they'll get smaller. But now we've talked about this a lot, right? Processed foods are a no-no, right? When in weight loss. So I think that Cheesecake Factory does a pretty good job of not having a processed food, right? So I think they're going to do very well.
Yeah, they make while they do it at their own commissary, not necessarily in the individual stores, they are known for making all of their own products. So their sauces are made in-house. They are made with natural ingredients, like you're saying. They're not using the Kraft Heinz brand stuff into their cooking. Not to make fun of Kraft Heinz. Why did my SMCI chart just go blank here? I'm going to go to the two of us while I restart TradingView here, as it seems to be.
Yeah, and look, I think there's a lot going on here in the markets, and we said this yesterday. We said this before. It is a stock pickers market, and we have done that, right? It's not buy a Mag 7 or buy. Now the S&P, SPY, the QQQs have pushed higher. SPY for specific all-time highs, but it's still a stock pickers market, and I really think in a lot of ways that's the biggest thing right now, and we've done okay. I think it's every time you see it's time to buy, right? Because this is what they're looking for. We know how much money Mr. Buffett has on the sideline. Here's something that to me is very interesting. Bill Ackman said he wants to build a Warren Buffett style fund. Right. So I think you're going to see some of these older guys that have been in the markets a long time, not Buffett age, but that they'll start to take some of that away from Warren Buffett. So I think you can see that a little bit.
Do want to point out a couple of pumpers here so far this morning on earnings reports. APPN, Appian Corporation, moving up nicely so far. And as I looked at their earnings report here, they had revenues up 15% year over year. Their cloud subscriptions were up 19% year over year. They did say their total subscription revenue was also up about 18% over year, and they had a GAAP operating income of about $5 million for the first time going positive. They had been negative there, so total revenue again up about 13% year over year, and they got industry recognition as Everest Group's process gave them the Peak Metrics Award, and they also saw their debt management of long-term debt reduced. So we see APPN moving up nicely, up about 17.57% so far this morning on that news. Another one moving up so far this morning, which is interesting because they don't have earnings till I believe the 20th. So tomorrow, CELH, which is Celsius Holding. I know the wife is a big fan of their energy drinks. They are a more natural sort of energy drink. Yep. And they definitely have a big one this week. Their CEO, CFO, and CMO will all be on their live webcast, and it does have them moving up about 7.21% so far this morning. So, Ron's pointing out that Bill Ackman is going to use HHH or Howard Hughes' company to create this Berkshire. So he is, yes, that is the vehicle he is going to use that. Steve, another earnings beat that we had today was Ionis Pharmaceuticals. They're up about 5.85% here. This is one that's had a really ugly chart as I was looking at it this morning. Will be interesting to see if they can kind of bounce back here. Their news basically was the fact that they actually had a positive EPS of about 66 cents a share last year. It was only 6 cents, so a pretty nice move to the upside there. Their quarter four revenue, while down from a year before, exceeded expectations, almost doubled expectations. And now their guidance for 2025 has them at over $600 million in revenue. So they are moving up nicely. Part of that, though, as we've seen, they've had a 34% decline in 2024. And the CEO did come out and said they have $2.3 billion in reserves, cash reserves. So it looks like they are in a decent spot here. I wasn't familiar with them, but
I think they're in a decent spot to get bought out.
Yeah. Another one moving up, an energy renewable company, Enlight, ENLT, up about 5% on their earnings also. Their revenue was up 53% on the year. Their adjusted EBITDA was up 49%, net income up 32%. They are expanding their renewable projects. They're adding about 30.2 gigawatts altogether. So moving in a good direction there. Didn't really have much more about there except that they're partnering with Snowflake here in the U.S. and partnering with Gakama Solar and Nato Storage in Europe. They're also big in Israel, where they're partnered with the Israel Solar and Storage Cluster. So solar energy company, again, good earnings, up about 5%. We do know a lot of the renewables have been down over the last few months. They've held up pretty well so far. Intel seen a little bit of a sell-off here today, Steve, down about 4.2% after making the big move up yesterday,
Yeah,
jumping about
close the gap.
16%.
Yeah, they pretty much closed that gap there.
Yeah.
Look, we last week, 2 weeks ago, I was screaming, baiting the table for Intel INTC that it looked pretty hot, that there was some serious movement there. And I mean, if you played Intel, you're a happy person today. If you didn't play Intel, okay, I understand. Yeah, this is definitely.
Yeah, I'm gonna watch, see if it retests down to this. It's back below the 2630 mark that I had sort of put as my line in the sand. I need to see it get back above and hold above that 2630 here to think it has positivity. Sticking in U.S. chip manufacturers, one that you don't hear all that much about, but from my hometown, Analog Devices from Wilmington, Massachusetts, right up the street from me, had some strong earnings reports. Rumored they don't even actually have earnings for another day or two. Again, for the 21st is theirs, but they are expected to beat revenue, and it looks like it's sort of been a pre-release of earnings. I've never really heard of that, Steve. Have you?
That could happen.
But
Sometimes they release earnings early, especially if they're good earnings. They like that surprise, and then
and that's what it is. You're seeing things dribble out in little pieces. Hey, it's now expected that their revenue is going to finish at this level,
right.
And those things, like they said, they're now saying that their Q1 revenue, while it's down 4%, is going to beat analyst estimates, and that their EPS, while it's down about 10 cents from last year, is going to beat estimates by about 10 cents. So looks like it's moving in the right direction. There's sort of a hidden one that could be a beneficiary of all of this move to the U.S., right? They do produce everything in the Northeast. So that is an interesting one. One that I just wanted to talk about, not because they're up 4.45%, Lee Automotive. I don't know if you saw that their CEO came out and talked about the fact that Chinese EVs are about 3 to 4, almost 5 years more advanced than the rest of the world, in their opinion.
Not gonna lie about that. I think they are. I think that they're looking pretty good. If you watch futuristic TV like I do all the time on Netflix, they're not using U.S. vehicles. They're using Chinese vehicles, right? Things that just look like in the future. And that's right. And we saw one big thing. We've been watching Nikola pump, thinking that they're going to get out of it. And guess what? They went bankrupt. We talked about that.
We warned about that. I will point that out. We definitely warned about that there. So, definitely, not everything that goes down comes back up. And where there is smoke, a lot of times there's fire. That's why sometimes you're better off sitting on your hands, and maybe you miss an SMCI, but at the same time, you also miss a Nikola. And you don't end up on the wrong side of that. So that's definitely a takeaway I have from you. On the downside, Steve, a couple of big losers here on earnings. Celanese, I had to look up exactly what they sort of do. They're an applied materials company. It looks like they do everything from providing paint for autos to processed materials that go into processed foods. So not all that surprising that they are down. We've seen that come into so much pressure. They actually are showing a net loss for the year. EPS was down about 1.45 to 1.45 from 2.24 last year, and their net sales were down also. Shares have been down as much as 11% in the pre-market, now down almost 20%. And they talked about weak demand in Europe and Asia, particularly in paints, coatings, and constructions, and that here in the U.S. and in Europe, they see a demand slump in auto and industrial markets.
Makes sense.
They've also had facility closures in Luxembourg, Germany, and Belgium to cut costs. So it does look like they were struggling there. What I thought was interesting, they're having a complete turnover of their leadership. They've announced that they have a new CEO, Scott Richardson. He came in January 1st. They also have a new chairman, Ed Galante, former executive at ExxonMobil, and they're bringing on a new CFO, Chris Kuhn from the Train Technologies company, and a new senior vice president for engineered materials, Todd Elliott. So they are cleaning house and doing it Is there a spot where that gets interesting for you now that they're cleaning house and sort of restarting here?
No.
Okay.
I mean, I think Celanese has a lot of issues. They got to prove to me that they can do it. I just don't think so.
Another company under pressure today, Etsy. Etsy had been moving up most of last week after the strong move up by Pinterest, a similar company. So in sympathy, we saw them move up nicely, but now down 5.54 today after their earnings. It was an earnings mix from them. Pull it across the bottom.
I mean,
here.
with them, Etsy made some pretty good highs there at 56. You know, and if you go back all the way to 62, they may push back up, but you know, I don't. It's not my bread and butter.
Yeah, and they had some troubles. Their gross merchandise sales, so their total sales across their platform fell 6.8%
Here we go.
year over
Howard,
year.
we're now open. We're now seeing a tick down almost 1,000 here with the advanced decline down 2,500. So a little bit of a weak start, I think. But I think we did what we did yesterday. You know what happened yesterday at the close? The selling was happening all day, and I said early in the morning that we'd probably see a melt up. We didn't see the melt up, but we saw at the end of the day all those shorts covering. So we're still seeing that, right? It's still a stock pickers market. There's Solana pushing higher here. I like that 170, 114. They may get back up to the 174 handle, but NVIDIA in the green here, so that could push higher. 96.4 now on Bitcoin. So there's a lot of things we've been talking about are pushing up. So I'm not disagreeing. Eli Lilly up $2.50 today.
That's a nice move by them. Tick is negative 400 here. Advanced decline down 2,600 now. So continuing to move to the downside. If we look at the Mag 7, you've got Apple slightly up. Apple should have their news today, right? They have their
right. Let's see what that new product is. They're really, really good at the hype. And then it's like, okay, another phone.
Yeah, mostly for years, their Apple days were sell the news events for a long time. I thought that they had sort of switched that, but we'll see. Tesla up about a 0.5 percentage point here, getting close. Again, that 360 for me is a tough spot for it to get through right now. So keep your eye on it as it approaches that. It's got to prove to me it can break and hold above 360 for me to look to a move to the upside on Tesla. Otherwise, I am more likely to short it at that level than to go north on it. NVIDIA slightly down here, about 138.86. First couple of ticks have been to the downside here this morning. On that, let's take a look at the Spider Select funds that cover the 11 sections of the S&P.
I'm really liking this Bitcoin move here, 96.5 here. If we can keep that pushing.
Yeah, we did see Michael Saylor announce they are going to raise another $2 billion to buy Bitcoin using convertible bonds. So we'll see how that plays out. They were up in the pre-market about 1% here. I didn't look right now. Up about 1.7. So moving to the upside so far today. Will mention, and I know my man Ron's listening here. Ron and I were looking yesterday. I've been talking about using the wheel trade, and I did my first purchase of my cash secured puts and MSTU yesterday. Those look like they're going to work out very nicely as this.
Okay. So how to explain that to the people out there what that means?
Sure, I am using MSTU, which is a 2 to 3x north position or bullish position from Tuttle Capital to basically buy it and rent it out down the road. I am long-term bullish on Bitcoin, as you know, long-term bullish on MicroStrategy. My goal is to first purchase either of those. And for Bitcoin, I'm using IBIT at a discount by using cash secured puts to get my position in. So I was looking specifically at the 850 on MSTU. I'll pull MSTU up here. And I actually have my I think I can pull up also the actual sheet that I used for what I purchased yesterday from Mr. Dr. Ellman. Where is that? I sent it to Ron. Here it is.
NASDAQ down about 40 points here, and the Dow down about 155 here, early trade. So, yeah.
So yesterday I put in 2 trades, and if you look down here in the blue at the MSTU, it was trading yesterday at about 902. I went in for the 850 cash secured put. I got paid 23 cents for that. and per share, I bought 500 of them, so I had to use about $4,000 in capital. With that, I am looking to make a 2.78% return on my investment in about 4 days, if those go unfilled. If I do not get down to that level, and based on today's move, doesn't look like it's going to happen. And again, if you look at that from a yearly return, that would be 253.78%. So, you can make some good money trying to get into your position, finding it at the price. We talk about it a lot, trying to be patient, right? We talked about it. Ron, I'm sorry you missed that one yesterday. I did send it to you, buddy. I know you said you had to wait for some other things to clear up to get in there, but that was, the idea is I'm being patient. I want to get to a level where I feel comfortable for a longer term entry, but I can get paid while I wait, right, Steve?
That's right. That's the whole point of options. I mean, the way that we play options today is not quite the way that we really should be playing options. A lot of people are playing the zero DTEs. But in this case, you're getting paid to wait, and there's nothing wrong with that. I like that a lot. 96
and then
now
once I get in, I'll be looking to rent out those shares just like I would rent out an apartment or real estate to earn income as I hold those shares long term. So, and again, we have on lots of sessions with Dr. Alan Elman, who is the living legend when it comes to covered call strategy. If you do a search through ChatGPT or Google or any of those, he is usually the first name that pops out. He has the best-selling books ever on Amazon when it comes to covered call exit strategies. And we have him on weekly. He's done 17 sessions with me. Make sure you're checking out, again, our YouTube, our Twitter, and our Facebook. We keep our LinkedIn. We keep them all on there for you. And he kills it every week for us. Steve, what are you looking at this morning? Anything catching your eye so far?
What's right now that my eye has been, if you notice my head bouncing around, 72.78 on light sweet crude. I've not been buying it, but oil is pushing higher. But I think it's on the back of that strong US dollar, which has been pushed back up this morning, 107.15 this morning. So the Dixie is really kind of trying again to push up. That's a lot of tariff talk from Trump, and that nationalism, protectionism talk is really starting to push. So this could put a little bit of pressure on stocks this morning, and that's why Bitcoin's probably pushing back up.
And you've said it, our man, Mr. Flanagan, who will be in at 10 o'clock here, has been nailing it when it comes to DXY. If you look, it literally hit exactly the support level he said to look for at 106.645 here, back on Monday before pushing back up. So his
Tesla with the pop here, 358.40. We're seeing Tesla pushing here a little bit this morning.
Yeah, Mag 7, we see Tesla pushing. NVIDIA's gone back to positive here, 139.90. We know 141 sort of has been the sort of spot there that's been unable to really hold above. Got to get above that 141 and hold here to continue the upward, continuation by NVIDIA. That's sort of been the spot it's been stuck at. Same thing I've noticed. Netflix struggles at 1040. It's made the one move above it, but that 1040 area seems to be a hurdle for it too. So keep an eye on that. We do got a lot of things that are pushed up towards their key, sort of resistance zone right now that you want to be watching. When I was looking at the sectors here, you can see energy is a big winner so far. I did have Devon Energy was one of the ones that was up this morning on earnings. Let's take a look and see what else in the energy sector is moving that way. See if any of the others catch my eye here. Do you see Bank of America getting hit pretty hard here, down about 2.24? Banks in general getting hit pretty hard here, Steve. We keep on hearing more talk about the credit card crunch that people are doing. I've seen
Warren Buffett's out of it, so hey. He told you you need to know about it.
Yeah, we've been saying that this is just going up and going up and going up. I put it up, I know, on our stuff yesterday. Consumer credit card loans, which you can find right on your trading views through the Quasar Markets thing here. You see it is at all-time highs at $1.95 trillion right now in consumer debt out there. And you can see if you back that up, it's a pretty ugly move up here over the last.
I was very happy during COVID where people were saving money, paying off some debt. I like that a lot. And
you can see that dip. And we know Jamie Dimon talked about that a lot, right? When it dipped down here. Everybody was really happy, but you can see that upward trajectory has really done. And in the last, 4 or 5 days, we've seen it move even more so to the upside. I've heard people complaining that credit card companies have cut their credit limits and stuff already. So we are seeing that reaction across banks. I think that's why most of these are moving to the downside today. I know SoFi does have earnings coming up here. They're not one of the biggest companies when it comes into banks, but they are a good one to take a look at when it comes to that. E-commerce, a little bit of a mixed bag, but mostly to the downside again. Etsy, a big way down on that one so far today, down 9.82%. Seeing GLBE, which is Global E Online, they had earnings also. They are down 11.42% here today. So we are seeing, again, if you're missing, it moves to the downside. Another one, Steve, that you and I talked about and bought way back down at that 1,600 level. Look at Mealy, made its move all the way back up to 2,000 here. I guess we should have been a little bit more patient, but we had a nice win in one day, so we'll take those quick jumping wins and run. But you can see that moving to the downside. Chips, a little bit of a mixed bag today. ASML, AMD, TXN, Texas Instruments, Qualcomm, and AMAT moving to the upside. Big winner, as I mentioned, is Analog Devices, up about 3.41% on their earnings. Not really a big loser here, except SNPS, who I'm not that familiar with, Synopsys. They're down about 5% here today, but we do see some winners. Some of the smaller chip companies doing really well too. STM, which is ST Microelectronics, up about 5.37%. So we do see a nice move up here overall.
I think one of the things that we need to talk about this morning, and you and I have been talking about it quite a lot, were those housing numbers this morning were just dismal. Housing starts change down 9.8%. With rates pushing higher, people aren't going to be buying homes. Not a good time to be selling your house, right? And the housing start number was 1.136 million. Forecast was 1.39 million, and the prior was 1.5 million. Oh my goodness gracious! People are not starting their houses; they're not buying this new, and building permits also pushed up a little bit, 0.1%, but that's about it. People just aren't.
Yeah, and I mean, I also saw mortgage rates had come in for the month, and they were down slightly. But when I say down slightly, 6.93%. That's still not low enough for most people to buy a home. I will say DH Horton has me a little bit interested. It fell back. We talked about it the other day, and I said I was looking for a fall back to this 125.52 area. It's fallen back to 125.50 here. So it is interesting to me. I do think they are one of the better. What's that?
I think it'll get below 100.
Really? Wow. I think it's coming back down to this area.
See right where I'm talking
back
about.
In 2023.
Right. There's nothing to hold it up now. It's gotten past the number 125. It's gotten down there. So no, I don't like it here.
Yeah, I mean that's the next big support level right in that zone. We'll see on that one.
Solana dropping again. Looks like more of that selling from FTX a little bit. Maybe they
some profit taken too. You'll have some weaker hands. Solana, you also get a lot of sales on a daily basis because it's the chain that most of the meme coins are on now. Yep. So when they launch, people move in and out of Solana to purchase those. So you do see a lot of movement on Solana. That's why it's great to stake it like you did, because it gets you a nice little move there. Bitcoin 96.1 here, so sort of staying steady. I had a laugh. Joe Cannon was making fun of Andrew Ross Orkin, saying that, hey, Bitcoin's become so stable over the last 10 days, 12 days. Maybe it's the new stable currency to use. It's less. He said it was less volatile than DXY and others. So I had a laugh at that one. Although he's been right here since about February 5th, rather. We have been in a very tight range for Bitcoin.
We have, yeah. I mean, I said this is about last year that I looked forward to the time when we actually were more
See some
stable in
volatility.
crypto,
Yeah, I
and
mean, that's what I
here we
want. I
are.
want
Yeah,
volatility in Bitcoin. I'm okay with it going down because then it goes back up. So we're not seeing that though. Mag 7 Tesla, there it is at 360 here. 360. This is the key zone. Break above this 360 here could give you a nice push up, quite honestly, all the way to the 390 level. So keep an eye on
we're seeing
Tesla here.
HIMS,
Try and move.
HIMS at just hit all time highs. HIMS.
Yeah, HIMS. They were, I think, going into earnings tomorrow. Yep, tomorrow they got earnings. Or excuse me, Monday. So
Right,
that's
and
an
I
interesting one.
think for them, I think
That's interesting. I wonder if they've got any information because on their compounding stuff, as we know, they had been a big beneficiary of those weight loss drugs that
correct.
weren't able to be produced because they are a huge compounder, and they were
Yep.
selling all of those. So that's an interesting one to keep an eye on. It is funny because yesterday it was down on a downgrade from Morgan Stanley. They downgraded them and basically said they didn't give it a price. They just moved it to equal weight. So yesterday it was down on that. Today moving up nicely. I don't see any new news on it here today.
I saw a new poll coming out on Germany's presidential election with the CDU now at 31%, the AfD at 20%, the SPD over at 15%. So things are really starting to sway again back to the left. Germany's a very left country. Things are swinging back to the left. The AfD, which is the right, think of it like East Germany in a lot of ways. The polls that were swinging to the right a bit, they're swinging back to the left again. So could be an interesting election over in Germany.
You know, Steve, you mentioned a little bit about, everything going on with the Ukraine. My bigger takeaway was that Europe is back to not being able to agree with each other. The European leaders, I don't know if you saw the German leader walked out of Emmanuel Macron.
Europe not agreeing with each other. I'm in absolute shock, Hondo. Yeah, I'm absolutely.
Yeah. We do see Garmin shooting up nicely here, 10.39%. They had earnings today, so obviously an earnings beat there. And if we do look, they came in with an EPS at $2.41 versus an estimate of $2.46. And they did have a beat also on revenue. So Garmin looking pretty good there, up 10.39% here. We'll take a little bigger look at that chart.
I think Garmin is winning big in the smartwatch series. Their tactics, their Phoenix, their Instinct, their Descent has been pretty good. Seems like people really like their new watches. People are maybe not doing the Apple Watch, maybe going to their golf watch. I bought my dad a Garmin golf watch. He loves it.
I was about to say where Garmin has really moved is into sporting, whether it be fishing, Garmin, we've seen a huge resurgence of the elite buying more boats. Without a doubt, right? You're down in Florida, you see them all over the place. Those are all filled with Garmin equipment usually. They've done that, and they've done a good job, like you said, in the golf industry of sort of making it very easy to have your stuff right there, whether it's on your watch, whether it's on your app, whether it's a little thing that you click to the golf cart, makes it very easy to do. But blows it away. They just moved to an all-time high, 238.50 here. And I mean, their all-time high had been at 222.97 before that. So nice jump.
The question to me about Garmin is with T-Mobile, right, and Starlink. Does Starlink put a pressure on them and saying, hey, now we have it. Everybody has an Apple phone. Everybody's got an Android phone. We're going to put Starlink in every one of those phones. Does Garmin have that advantage anymore of having the Iridium network? And I don't think so. If you look, you can look at Iridium too, by the way, the stock. I will also say that I think that Garmin has done a good job with getting into the kids, which is what Apple did back in the day, right? Getting kids their watches. But Iridium Communications could be the place where things really grow because that's where Garmin uses Iridium network. If you don't know, their satellite systems. I like the Iridium here. I think Iridium and Starlink. Man, could you imagine if Starlink bought Iridium? Then they have every satellite. They don't even keep pushing satellites up in the air. So there's a good chance
They're
of
only
that.
about a $3.5 billion market cap, so that wouldn't be a tough buy.
Yeah, Elon could just shake his pants and out comes the $4 billion, right? $5 billion to buy the Iridium network is what Garmin is on. So, there's a good chance of that. I like Iridium here, actually. I think the price is still pretty cheap. I liked it better at $9 and $10 back in the day. But I like Iridium here.
Yeah, I can't argue here. I'd be looking more for a pullback towards this 31.63 area for a great entry, because you've got room up to this 36.22 for sure. You can see it tested it here in mid-October, after falling below that last February for the first time in, since 2022. So if it can make the move, this chart looks a lot like what we just saw in Intel, looks a lot like what we just saw in SMCI, right? Consolidation for a good amount of time. And when I say a good amount of time, almost a year of consolidation in this 24 to 30 zone before finally breaking to the upside here. So yeah, I can't argue with that at all. And we do see Deutsche Bank had an adjustment, gave them a price target of 41. So even $5 above my little analyst hat there that I just put on. So that's a good find there, Steve. This is one I'm going to put on my chart. This could be, like I said, this would be one where I'd be looking maybe at a cash secured put on the downside, trying to earn some money while I wait for an entry.
Hey, I'll also say that Meta has had a 20-day win streak, right? And today is day 2 of their losing streak now. So could Meta come back a lot? Yes, but Meta's done a lot of things to change their ways. I liked it when it was under 100, if most people know. I don't like it up here. This is a little high for me on Meta here. That selling, I think it pulls back to the somewhere around 640-ish, right with that.
Yeah, I can't argue with that, Steve. I was about to say this looks about where I made that same call on Tesla, right? It broke below. I would say it's got to get that below that 691.55. But if you break below the 691.55, that sort of saved its butt here on this pullback. You're going to pull back at least to 674, and then most likely towards this area at the 50-day MA, quite honestly.
That's what I'm thinking, yes.
Yeah, so keep an eye on that. And if you say, man, these ones fly, they don't do that, take a look at what Tesla did. And again, in this area back here is where I warned you to watch for that move to 630 once it broke below. It was actually when it broke below right here, this 378 area. So it can continue. These can continue, even the Mag 7, to move to the downside. NVIDIA 138.63 here, Steve, pulling back a little bit. Again, for those of you looking for an entry on NVIDIA, I'd be very interested towards this 50-day MA, and even a little lower. Again, I'd be looking at that 133 area or so for a nice little entry there for a long if you're looking for it to go towards the upside. Iridium was, Ron, sorry, IRDM, I believe it was. Yep, IRDM, Ron, IRDM, Iridium.
I think the market's just waiting on some new news. I think they're waiting.
Well, we do have to mention we got the FOMC coming in today with their meeting notes. So do expect to see what they had to say. We'll find out. But I think we know, right? They're all sort of in the same boat again. It looks like there's not as much.
They don't want to lower rates. They definitely don't want to raise rates. They're fine where they're at. They don't know what to do. They're behind the 8 ball again. Yeah. All you gotta do is look at the housing numbers. All you gotta do is look at the job numbers. Wake up, Fed. Wake up.
Yeah, look at the inflation numbers. I mean, look at it all. They paint a picture. You see it by what's moving up. The fact that Bitcoin's staying at 96. The fact that gold.
They're more worried about inflation than they're worried about people losing their jobs and not being able to buy houses. That's a problem, right?
I mean, and again, we saw the largest employer in the United States is cutting its workforce tremendously, right? The federal government. For those that don't know, federal government, by far the largest industry out there. Hospitality is second. And I don't think those people that were working for the State Department want to go work at Chuck E. Cheese next. No. So it is not pretty there. That's a great one. I'm going to have to hit up our man, Paul V., from Capital Hire to give us a little bit of insight of what he's seeing there in the hiring markets. Maybe I can get him on over the next couple of days. We do have a full boat of Quasar contributors over the next couple of days. Of course, Jeremy Vreeland, Matthew Tuttle coming on. We have CMT stepping up strong with Mark Petrino coming in. We have your friend Todd Horowitz, otherwise known as Bubba in the trading world. He'll be coming in this week. So we've got a lot of people on to give you some good ideas, some trading tips here this week. Make sure you're tuning in. Make sure you follow us on all of the socials so you're not missing out.
You know, we're getting close to the 10 o'clock hour. I mean, the tick has just gone positive here. So maybe all those sellers are done and we go positive here. The NASDAQ's only down 38 points here. So we could go very positive here pretty soon.
It does look like it's trying to melt up a little bit here this morning. So maybe we see that today. I think everybody's just waiting on FOMC, and I don't think anything's going to come out of there. I think it's a nothing burger, and it, like you said, you could just see that little bit of a grind up throughout the day. The sectors are starting to tell me a little bit of a story on the day, and they're not. You see, energy is leading the way. It's got some serious strength. Energy is the only sector that seems to have strength. You got a little bit of a move to the upside by consumer staples and by healthcare, but healthcare has been beaten up so much over the last couple of days. It's why it's sort of bouncing back, in my opinion. We see real estate getting hit again hard today on those news. Financial sector down, communications down, technology down almost a half a point. We see material sector down 1.27% here, Steve. So overall, like you said, it's definitely a stock picker's market. I don't think we see a real broad range move to the upside. I think it's going to be bits and pieces and drags and dribbles.
Not until we hear from the Fed. I think we're going to analyze what the Fed statement has to say, and we'll post that on Twitter as well. But to me, I think we're just waiting on what the Fed has to say.
Carvana moving up here in anticipation of their earnings tomorrow. Up about 2.6%. This has been a high flyer. You trusting them going into earnings, Steve?
Not one bit. I will say that people just aren't buying vehicles right now. People are just sitting still. There's a big malaise in the world that we saw going into the election, and people thought that was all because Trump won. But now we're back to tariff talk, and now we're talking about Ukraine, and it's a mess now, getting worse over there. Incompetence in the White House is a little high right now, and we're starting to see that, right? And it's coming out in an international stage. We've had incompetence in the White House with the previous administration, and we're now seeing it again. We need to see some more steady hands, and we're not. We're seeing craziness, right? So that's not good, and the markets don't like that, and the Fed is doing its own thing. So the world right now, I'm hearing it from lots and lots of people. The business world is saying the same thing to me, right? They're saying, Steve, we want to do business, and we like the fact that Trump is president, but tariff talk, but Ukraine, but it's like the big word "but" is coming out a lot, right? They just don't know what to do because of that. You're seeing it, right? You're not just seeing it. Yes, the earnings were good, previous administration, but now we need to know what the guidance is, and they're all saying guidance is like, well, we don't know yet, but we're excited. We should always be, as you should all know here, I don't believe in hope and luck, excited for the future. But right now, people just aren't. So I think that's what you're seeing in the markets right now. We're also seeing the PE ratio of the overall market at 27 to 30. And that's just too high, right? Compared to international markets, which is why you're seeing money come out of the United States. We've talked about this for over a month. If you want to invest in Europe. If you want to invest in Asia.
Well, Europe be tough right now. I mean, stocks just hit all-time highs, so be careful there too. That was probably a 2 month ago call for sure when we were saying that.
We did call that.
Yeah, I'd be careful right now.
I do want to point out,
though, also, as Carvana goes into earnings, announced that their chief financial officer, the guy who writes their earnings report, sold $13 million worth of stock leading into earnings. So that would tell me a lot. Personally, I would be very wary if I'm holding Carvana going into earnings here, just because of that. You don't usually see that, right? I've never really seen a CFO right into earnings the day before get an announcement.
Yeah, well, I'll tell you exactly why he did it. It's very simple. It's February the 19th. He's doing it because he owes taxes, so he's paying his taxes off with it. Yeah.
Okay, we see Disney, the duck moving up a little bit here, 110. Steve, I mentioned yesterday they had a big hit at the film, thing. Captain America $100 million, first movie in a while to do that in the first weekend. So a nice big win there. It's continuing to slide up. Are you seeing it's been busy at Disney World?
Disney World's packed completely. I mean, you can't even get into Disney World right now. You know, I always know when Disney World is not packed without going. It's very simple. You see the commercials on TV. Hey, for Florida residents, come hang out with us. We're not seeing those, right? You do when you do see the commercials, maybe in the heat of the summer, like September, October, when summer's, you know, the kids are back in school, right, in October. You see the commercials. You see the commercials while the kids are in school. I'm not seeing that right now. People are coming to Disney now. I'll also tell you where Disney World is really kicking it in, and that is in their cruise ships. Their cruise ships are growing, building. More people are taking that, and they are building another new cruise ship. So you're seeing that too. 95.7 now on Bitcoin, with the 96.7 now and 95.7. I mean, it's just
Nat gas still moving up here, Steve. 435 here. So we do see Nat gas here today. Silver's been dropping a little bit here, back at 32.6, like you said. Bitcoin 95.750, still up slightly for the day, but down from where it was a few hours ago.
On Squawk Box here, we're seeing where my friend Jim Bullard, former Fed president of St. Louis, just says that markets are a little bit concerned about inflation turning around and going higher. So it means he's also thinking that the same situation. So yeah.
Yep, you can't definitely see that. Robinhood up nicely today, up about 1.51% here after taking a beating yesterday. So we do see that nice little bounce back by Robinhood. It's one I've been keeping an eye on here today. If it can't hold that 60.52 level, you're probably going to see it drop down all the way to 56 here before a move to the downside.
I see our boy Steve Flanagan coming in here.
I do. What just happened here to you guys? I'm going to bring Steve in. I look like my camera, for some reason, has stopped working all of a sudden. Let me figure that out. So I'll have you two on while I take a quick break to fix this.
Good morning.
Good morning, Steve Flanagan. How are you?
I'm doing great. How are you, Steve? Active day here so far.
Yeah, you know, I was getting ready to bring that in on you. You know, look, there's so much going on. The malaise we just talked about, Steve. The malaise in the electorate, shall we say, back in November was definitely felt at the election, right? Yep. Overwhelming positive for Trump. The liberals are out, and everybody's feeling good. So, I mean, I guess liberals were not feeling good. Democrats were not feeling good. But there was in the business world, shall we say, people were feeling a little bit better. But here we go. I'm hearing, Steve, that in the business world that people just aren't as happy right now. There's still Ukraine. Ukraine's getting out of control. We're hearing Europe, same situation right now, right? We're also now hearing it from the business side. Housing numbers are way down. Inflation's going up again. You just heard the Fed. You just heard Steve Bullard talking about it. Bullard saying that, hey, we got a problem with inflation. These are things that are not going to make the markets happy, especially not in the currency markets.
Absolutely, Steve. You know, today was a big shot across the bow, as you and I both say, with the Fed being behind housing. Hello, guys. You know, it's a huge part of your economy. And it just shows, though, you know, yes, Steve, I agree with you. Everybody's kind of here on hold. That's what the markets are telling us. That's what price action's telling us. Let's see, my point, let's see what this budget is. Let's see what, are there going to be tax breaks? How are they going to pay for them? That's what everybody's waiting for. You know, hey, Doge is doing a lot of things, uncovering waste and other. This is wonderful, but we got to see Congress and the elected bodies get the things in place that we're looking for, which will support the financial markets to take the next step. And hence, here we are at a pause. That's what we're at right now. Anything that goes up, you sell it. Anything that goes down, you buy it back. Simple thing.
Yeah, that definitely been the thing to look at, without a doubt. DXY did exactly like you were talking about here. Let me pull this up.
Got a little bit lower than I thought it was going to get. 105. I'm sorry, 106.57 area. 107.10 right now. I love it in this 106.60, 107 area as a place to reestablish a long
Position.
dollar
Okay.
index. I have a definitive point in it. 105.50, 105.30. If that breaks, okay, I'm sorry, 106.50. If that breaks, then I'm looking for another 100 points to the downside,
Right.
and which would totally wash out the King dollar trade, which a lot of people jumped into. But as you can see, since we put the high in over 110, this has been a steady drive back down. Another thing, which, after we see all these earning reports and everybody's cautious on the dollar strength, not a bad thing for the economy as well. And like I've been saying, it's the first 3 to 4 months that we need to get through before I think King dollar takes over.
Do you think that all we hear on the news and what we see is credit card debt, credit card debt, credit card debt? Will that start to play into the King dollar at all?
Yes. It's another, like housing. Those are things that are rising up on your horizon that you just cannot ignore here. But a confidence builder for me was, look what the new Treasury Secretary said. The first thing, we're not talking about the Fed and lower the short-term rates.
Right.
We're focusing on the 10-year. And so these type of comments really, to me, say these guys know what to do. That's why I'm holding off and saying, I need to see this budget now. I need to see all the parts connected. Show me that we're committed to this America First domestic recovery. And then I start really wanting to believe. And I think then that's what we're looking at April, May, where I think the shoots, everything takes off.
Going to go overseas a little bit. I'm going to jump ahead here. I saw New Zealand made a decision, didn't they?
Yeah. So, since we talked last Friday, abysmal U.S. retail sales, now housing starts. You've had two big things. RBA came out, Reserve Bank of Australia, lowered rates 0.25%. They're now at 4.1%. But then the New Zealand RBNZ, Reserve Bank of New Zealand, came out and gave a 0.5% cut.
Right.
3.75. Now, why I highlight that? Because a very actively traded currency pair is Aussie Kiwi.
Okay.
In this case, I actually have been playing long Aussie, short Kiwi, which I exited after the New Zealand move. And it's up over 111 now. These are very high levels, breaking out on this chart. So that's something ahead of us, though. I need to point out three things. That's our backdrop. Lower interest rates continuing in the world. German elections this Sunday. Steve, you've talked about it there. CDU is the prevailing party. They're showing around 30% or a little bit more. AFD, the Alternative for Germany, around the 20%. The AFD is all I want to focus on. They're a populist party. Yeah, they're talking them and they're painting them into the fringe, but they're the populist party. They're around 20%. Well, on Sunday, that's what we want to watch. How high do they score or how low do they score? And that's where we're going to get a better feel. I think the euro, its underbelly, its Achilles heel is still down. Then we have NVIDIA earnings next week. Yeah. And then the big one, ECB comes out March 6th, expected another cut to 2.75%. Rates are still going down in the world. Back to Steve. Come on, Fed, wake up.
Yeah, I mean, this divergence keeps growing by the day, by the announcement, pretty much, right?
That's correct. And that's the underbelly of why King dollar scenario. At some point in time, when you listen to the central banks after they've had their round of cuts, nobody mentions the dollar.
Right. And they don't.
One day, all of a sudden, this dollar is going to come and bite them right in the you-know-what, and it's going to wake everybody back up to the fact that you just can't leave a blind eye on because it will begin to cause issues such as dollar-denominated debt throughout the emerging market world. We saw this many, many years ago in Latin America when everything was tied to the dollar. at some point in time, financing the debt becomes a major problem to emerging markets. So, but that's
Well, let's
not
talk about that. I had a long chat yesterday with Rakesh Gupta, CEO of KiwiTech, about the dollar rupee. That I thought that the rupee was literally it's an all-time high, right? I mean, the dollar against the rupee is at all-time high. I think it might be done. Should we take some profit in the dollar rupee here?
You know what, Steve? Yes, I would agree with that. And it may go further.
Mhm.
But you know, the smart money saw this coming. I think it's time to exit into this, whatever this next leg may be. It still could weaken further, and the dollar still could stay stronger. But I think after India met with the United States, I'd be careful about the type of agreements that were made that we have yet to become privy to.
Right.
So, yes, Steve,
One
I
of
would.
the things that I mentioned yesterday to him, I said, I think this is the end because I think India might raise rates. There's a good chance of that, right?
Well, India has definitely got an eye on their currency. That's a country that follows the currency a lot closer. And Steve, that is something that's out there. I think what in India's situation, you need to see Modi start to take more of a, again, I'll use that word, the populist. You know, he has been a popular, but he needs to reach out and grab all the fringes and bring them into under the umbrella. You know, he's been isolating himself a little too much there.
And he's talked about buying U.S. Military equipment and military planes.
Yes, that's another positive to this arrangement.
And oil and gas too, right?
Yep. Yeah, you know,
because they were the big buyer of Russian gas over the last few years, sort of making the sanctions sort of useless, right?
that's right. And I think as we've been seeing, these world leaders come to Washington, meet with Trump, and the subtleties after the meeting are positive things begin to happen. So, Steve, I'm bang on with your idea. It's time to exit that that trade and start to look for a period where we may begin to see a turn in that relationship.
And you know, I want to go back to one of the points you made earlier about Doge and all of the efficiency that you were talking about earlier. If depending on how you take the answer, Doge itself this morning said that they've found a little more than $55 billion in savings. Some websites are now saying $80 billion in savings. So I'll take the higher number, $80 billion in savings. I did the homework. I found out that per minute, the United States government spends $11.93 million a minute. Per hour, they spend $715.8 million. 6,000 million to make a billion, as we always know. If we divided the $80 billion by our hourly spending, that's approximately 111 hours or 4.65 days. So they found 5 days of spending. Is that enough to make a dent in the United States?
No, but it's a positive step. And we still have, you know, so many other, I mean, as they said, all these agencies that have been established. So, I mean, we're only, 4 weeks in, and, you know, we're beginning to see this. So, no, Steve, that's not enough in itself, but it's the right step if we go through Department of Education and other areas. I'm sure that just finding inefficiencies, you know, and Social Security, I mean, we've seen the headlines on that. I mean, okay, whether they're being paid at 125 years old or not, it's the fact is, the systems that our government is using are so archaic that any move in that direction is going to be a net positive. And that's why I want to see the budget. I want to see what they pass, and I want to see how it reflects these projected savings.
And you know what's interesting? I had 6 calls yesterday. And every single one of them to a business owner or a capital markets company, they all said the one thing they're worried about the most is the debt ceiling, whether or not that will get raised or not. That seems to be prevalently in everybody's mind in the business world.
Yeah, because I think what it shows is that, is our government working? Or are we going to say, I've got a 3-seat, 4-seat majority, so I'm going to do this, and you're all going to vote against it, but we're going to get it passed. I think what everybody's waiting for in the business world is this real? you know, the flavor, the winds of change are refreshing to the business world. But are we going to see it now play out in Congress? Are we going to see Congress actually say, hey, this is great. We found all this savings. Let's pass this along. This will help fund that tax break that we're talking about. This will help fund no taxes on Social Security, no taxes on tips. These are the type of things that everybody's waiting for to see. Talk is great. What we always say, you know, can you walk? You walk the walk.
Walk the walk, right, buddy? As you say,
talk
absolutely.
Right. So
I'm going to take us back overseas here, if that's okay. Did you
Sure.
see the Japan's trade deficit widened to 56.2% in January? Were you surprised at all by those numbers, Steve? I know we've been keeping an eye on Japan as maybe the next area to invest in.
Yen is my outside of the dollar is my favorite play. We're trading down here at 151.85, supports at 150.120. If we break much below there, I would say use 150.80 as the line in the sand. That breaks, we're going into the 148 zone. And that could happen very quickly because the world is still behind the 8-ball on this play of being long yen. The world for 25 years has been short yen on a carry trade with zero interest rates. Japan is in an interest rate cycle. The numbers out of Japan are showing positive. We had the GDP was plus 0.7 in the fourth quarter. 2.8% on the year. The deflator was 2.8. Why is that a big thing? Because Japan wants some degree of inflation, having fought 25 years of deflation. So the numbers out of Japan are actually supporting this projected higher interest rate scenario. And that's why I like the yen, especially when the dollar begins to waffle a little bit. You want to jump into that yen play. Maybe long yen, short euro would be a better play. This way you remain outside of the dollar.
I think I have that one on this. Japan euro, yep. So that's right now trading at about 0.006331, it looks like.
Well, you'd have to invert that to get
invert. I need euro to Japanese. I have the backwards. Sorry.
Japanese. But you know, if you look through the currency world, everything is telling us stability here is achieved while everybody's waiting for the next piece of information. We look around and we see the Mexican peso 2038 right in the middle of our range of 2002 the bottom, 2088 the top. Canada 142.10 sitting right here. Numbers out of Canada have been reflecting a long series of interest rate cuts, and the patient is showing, you know, some life in the Canadian. And how could they not? If the U.S. is growing, Canada and Mexico at some point are going to, you know, be dragging along with us. Although the Mex, I'm a little concerned at, you know, their rates did come down recently. Banxico announced a significant monetary policy decision last week, reducing their rate by 0.5%, now bringing it to 9.5%. So starting to remove some of that interest rate.
Yeah. So going back to Canada for a second here, would you be more looking for that pullback towards that 141 area for an entry here? Or are you thinking it's got some pretty good asymmetrical bets towards the upside already?
I kind of like it in this zone. I think if I look at the dollar index play, which is predominant the euro, and I've highlighted a German election and then the ECB ahead, I'm kind of thinking that this is the level where I'm looking to get into the dollar index. I'm looking to get short euro. I think that the dollar CAD at these levels is going to be reflective of that, and we're probably in the buying zone right around these levels.
Yeah, again, nice little asymmetrical trade. If you get in around now, if you see it drop below that 140 level, you know you missed the boat and you want to jump off the ship, so to speak, and you've got nice upside right to that 143 to start off with, and then 144.9.
Right, and you know, if you see us north of 145, that's probably a level to just, because CAD is going to go into one of these protracted range trades, and I'm thinking 141, 142 downside, 145, 146 topside, and that's probably going to hold for quite some time.
I like that call right there. You can see it in the charts. pretty good. I like 145,574 is my top line that I would be looking to exit. Give myself a little wiggle room there. We don't try to pick the bottoms or pick the tops here. You want to be somewhere close to them, but not at them, right?
Right. So I would highlight in the world of currencies, the one to be watching here. I think that the dollar index in this zone is a buy, and I think the dollar index is going to start working our way back up. If we break through a 106.50, that's going to yield probably at least another 100 points as people unwind totally out of this trade. But that's where you'd want to, when everybody's unwinding, that's when you want to step in and put your, play back on. And I'd watch the yen. The yen is in a dollar sideways trend. The yen is going to gain favor, and I look for a yen appreciation with a 151.20 break. 150.80 would be the line in the sand. That breaks, then I look for a 148 mid-level. So that's the world of currencies right here. A lot of news coming out ahead of us.
Yeah, and a lot of them at the edges. We're not really in the middle of trading zones. We're right at the edges on almost all these currencies you talked about. Yeah. Traders, if you don't know what I'm talking about, we're right at pivot points where there's some serious movement that's going to happen if it breaks one way or if it uses it as resistance or support that we got to keep an eye on.
Right, Howard. And, underlining that point, though, is Steve and I would reflect a world that we're used to would be sell dollars. And you don't want to be long dollars at these levels. The dollar is way too high. That's the world that we've all been used to. And that's what the market is showing us, is reflecting, because we all trade better when we look back at the news. Looking forward ahead of us is meaning to put on a lot of risk.
But I would also say, Steve, that the talk of tariffs is a little high when it comes to currencies, right?
Yes.
I mean, when you look at foreign countries looking to buy our products, and I know Trump's been talking about manufacturing for a while. He wants to make U.S. a manufacturing hub again. Who wants to buy dollars when it's too high, and who wants to buy our products when you're getting tariffed and your prices are high and inflation is high? They're not going to buy from us, right?
Exactly. And, that's exactly right, Steve. You're going to sell a product overseas, but they're going to put a tariff on it, which takes away all of your competitiveness. So it's a stalemate that the world is looking at, and that's what currencies are telling us. We're in a stalemate here. Is it a negotiating tool? I think we all hope so, because we all don't want to look at what that world is like ahead of us, because we all can pick a textbook up and look at, the 1928, 1935s.
You literally took the words out of my mouth. I was going to say that again. Yeah. I think the word that I've been hearing a lot, and I've said this now for about a week and a half, is stagflation. I think we're seeing stagflation right now in a way that we haven't seen it in political talks in a while. And I'm a little concerned about stagflation here. Are you concerned as well about stagflation?
Steve, wow, you're bang on. We've come from 2008. The greatest concern in the world was deflation.
Right.
Okay, we've knocked deflation out through a variety of new tools that the Fed, QE, et cetera. And now we're sitting at a point, what's the next step here? Everybody's, inflation. No, it just doesn't happen like that. It doesn't happen that quickly. Inflation was 2020 and COVID, let's face it. Now you're definitely, Steve, a stagflation environment is not good. What is the solution? You and I and we're all kind of touching on it. We need to reflate. And the way you reflate is lower interest rates. We can tolerate a 3% inflation. Come on, guys. Who came up with this magical number of 2%?
Purple tie.
We can allow 3%. We need to grow our way out of our problems.
Yeah.
If not, Steve, you are so
exactly what I've been saying. Let's grow our way out of this.
That's the answer. You just hit it. No one does better because they retract. We only do better if we grow the
lower
GDP.
Taxes, lower inflation, get rid of tariffs. Let's get back to making what we do best. Let's build, create, and improvise. And the United States will lead again. I just had a chat with a friend of mine who's in global sales, and he told me, he's like, Steve, do you realize what the biggest problem is right now in the world? And I was like, well, there's a lot of problems. He goes, but the biggest problem is the IMF. The biggest problem is the World Bank. And I said, why is that a problem? He goes, because they have mandates. It's in their charter that if we, as the United States, do not lead anymore in the World Bank, it moves. The headquarters of the World Bank moves. And guess where it's going to? China. If we don't get off our high horse and start to actually win again, we might not be the biggest economy in the world. And if that's the case, they move to China. And if you think about it from the perspective of Africa and Latin America, China has got their fingers in almost everything. And I see why Trump wants to take the Panama Canal back. I totally understand that. That makes perfect sense. Maybe not politically, may not be the nicest thing to do because we gave it to them. But yeah, I totally understand that.
And they also built 3/4 of what it is now versus what we gave them.
Yes,
It's not the same Panama Canal that we left them.
Right. And who benefits from this environment that we're talking about? The people.
That's right.
Jobs. People can suddenly start to save money, spend money. They and what is that the root of? That's the root of the populist movement. Yeah. And that's why I'm bringing this home. Let's focus on Sunday and the AFD. Watch the 20% barrier because they are the populist movement within Europe. We've seen it in Italy. It's been growing in France with Le Pen. If this happens in Germany, this is a major positive for the macro environment, for the bigger picture environment. So that's what I would leave you with as to watch ahead of us.
Absolutely. Yeah, we saw Stotts walk out of the meeting with Macron yesterday. So, there's definitely no agreement in Europe. Steve wasn't surprised by that at all. I'm sure you're not either. It does look like we're heading back to, them bickering about everything, which doesn't lead to a good place for the European stock market. The stock's just hitting 600, just hit an all-time high. Are you thinking that's a little overblown at this point?
In European stocks, yes. There's too many unknowns ahead of me. I would be taking profit. But the reason is that the European stocks and everything is because it is a low interest rate environment and rates are going lower. That is a positive to equity investing. But at this point, there's some uncertainties out there. I mean, why wasn't Europe invited to the Russia-U.S. Sit down? Because they can't figure out what they want.
Yeah, who do you invite? There's no leader. I think that was my biggest takeaway is that, where you have a difference is right now, you have the president who is a firm leader and a big personality. And in Europe, you have no one there to sort of fill that void right now. Macron's trying and nobody trusts him.
I mean, Macron keeps talking about bringing the Ukraine into NATO. That's going to go over well at this negotiating process.
Yeah.
So
I just did a quick check, and I wanted to, I run several GPTs to get an overall opinion polls in Germany, and the CDU, which is Olaf Scholz, who's there now, is leading. You're right, with 30% support, and the AFD at 20%. But the Social Democratic Party, SPD, the Greens they're 16 and 13 for the Greens, and the left is 7%. The FDP is at 5%, which is another left leaning. And the BSW, which is another left leaning, is 4%. The biggest number out of this polls is, and I aggregated them, right? Out of all the polls that are out there, aggregating them, 20% are still undecided, and the left parties have said they will not form a party with the CDU. So this is could this be one of those oh my God moments for Germany?
Yes, Steve, that's exactly what I'm putting my money on the line. Yeah, I think this is a very big moment for Germany because if that 20%, if 10%, half of it goes into this AFD party, the Alternative for Germany, that's going to, their platform, their platform has a lot of fringe elements in it. But one of the elements is that they want to reconsider this euro.
Yeah, they do. They want to leave the euro, and in a lot of ways, if you see, I'd love to show a chart of it where the AFD is. It looks like East and West Germany. It's like they're going to build the wall again, right? This could really separate Europe. This could put Europe in a different tailspin in a lot of ways.
Yes, and to really, I won't belabor the point, but to understand, we've got to look at this from a little time perspective. 1999, the euro formed. Okay, so it's only been in existence for a short period. Prior to that, the East and West Germany situation, we're back into, Ronald Reagan. West Germany was forced to accept the Ostmark, which was the East German currency, at a ridiculous exchange rate of like 8 or 10 to 1. I forget the exact number. I'm probably wrong, but it was a ridiculous exchange rate. So the balance of everything fell on the Germans' back. Then again, the euro. And we've got the Greece problem. And we've got the Italy problem. And that all fell on the back of Germany. So Germany has been, essentially, the taxpayers of Germany for the last 30 plus years have been financing all these ambitious political dreams.
Oh my God. Are you telling me the Deutschmark is coming back?
Wow. Wouldn't that be something?
There you go. I think I still have a few in my dresser, so I'll be ready for that.
Yeah, well, they'll just come back at a new exchange rate.
Yeah.
And you will not be ahead, trust me. But,
well, Steve, we are going to take it away on this note. Why don't you give us our last words of the day, Mr. Flanagan?
Paralysis right here, range trading, a lot of unknowns ahead of us. So, don't be going all in on this. If you do, make sure you have a definitive stop loss level where you just out, and that's that. But there's so many unknowns ahead of us that are yet to come out. There'll be plenty of trading opportunities ahead. So
awesome. Thank you so much, Mr. Flanagan. We'll see you back here on Friday, like always. Quasar Markets fans, we'll be back at 11 o'clock with Dr. Alan Ellman in this week's session there. And then we have at 12 o'clock, I'm back with Agnieszka Wood, our trading mindset coach. At 1 o'clock, we have Scott Bauer talking about how to lock in profits with a protective collar strategy. And then we have the Nigerian brothers from Rebels on at 1:30. And tomorrow we've got a big day of guests on here too. A few of the CMTs, chartered market technicians on coming to talk to us and give you guys some great technical analysis. And we'll be back with Mr. Flanagan on Friday. See you guys on the other side.